Hello, everybody. Welcome to the webinar. My name is Mark Shaws, I'm the pattern trader. I'll start this in just a few minutes. In the meantime, go ahead and get a cup of coffee or what have you. Excuse me if I'm a little bit casual today. I just recovering from surgery and I try to go do a little stretch outside before the webinar. So I'm just setting everything up. Hey, Jovan, we got John Curtis. Welcome. Welcome, everybody. We have a ton of people. We already have 175 people on this. I'll be starting in just a few minutes. I'll get everybody situated. John, thanks for Annette. I guess you're back for many weeks in a row, so welcome again. So some people are repeat offenders. So that's always welcome. The more the merrier. And this is this recorded? I think it is. It's also going to be live streaming on YouTube. So you can simulcast it on YouTube or pick it up on YouTube now or later. Hey, Yana, how are you? Saw Yana earlier. Nabaraj is on YouTube. Welcome. So I'll give this another minute or so, and then we can just go ahead and get started. So Annette says, I learn something new every day. So that's, to me, that's, I embrace learning. I just love learning anything new. And that's, life is a continuous process. And, if you're trying to improve, you're always trying to learn something new. And the thing about the market that's so dynamic and fluid is that it throws us a curve every day that, even if we lose, we should learn from our losses. Life is a process. It's a journey. It's a journey without an end. Jess, yeah, you're welcome. Tammy says you can never stop learning. That's absolutely right. So I think I'm just going to kick it off. We have over 218, 219 participants from all over the world. So really want to thank you. Fantastic outpouring of support. And also, commitment and devotion to yourself. Obviously, to peel away an hour or two, not knowing what you're going to, pick up, it just shows that, you're willing to commit to yourselves. So the applause is really to you guys. Now, many of you on the webinar already know me, but for those of you who don't, I'm just going to digress, give a brief introduction, who I am, what I do, just so we can put everything in perspective. So, I've been trading for more decades than I'd like to or care to acknowledge. They go by so fast. I started trading, I would say, in my junior year of business school. I was going to one of the best business schools in the country out in Los Angeles, the University of Southern California in Los Angeles. I was studying finance and marketing. And I was learning how to pick apart investments from what we call a fundamental standpoint. So when we look at a company from a fundamental standpoint, you would look at the price earnings ratio, you'd look at the sales, to inventory turnover, you'd look at the management, you'd look at, all kinds of what we call fundamental information to try and derive, a conclusion about whether, a company is, a good investment or not. And, sounded all very logical. And I was, really embracing my schooling. And right around the same time, my dad was doing business with this investment banker. His name was Graham Loving. Now, you couldn't make that name up. Graham Loving was an investment banker that was helping my dad raise some money for a drive-through animal park called Lion Country Safari. And this was all the way in the late 1970s. And so in addition to his day job, as an investment banker, Graham was also actively trading the commodities futures markets. Everything from orange juice to cocoa futures to live hogs to T-bills to, there's about 30 different, soybeans, soy meal, there's 30 different esoteric, commodities futures markets that he was trading all at one time. And he was making a fortune doing it. And so it wasn't only that, that he was making a fortune doing this, it was the way he was doing it, which was so diametrically opposite to everything that I was learning or understood about how to evaluate investments in the market. And this is way before the days of the internet, but before fancy charting services. So really what he would do, he would just take a piece of graph paper that you go down and buy at the corner grocery store, and he'd just plot an X and Y axis, for, price and time. So price and time. And every day he would just plot the daily closing of live hogs and soybean oil and all these things. And after about 3 weeks, there was a pattern, that was emerging. And he used to say to me, Mark, all I want to do is buy a market that's going up and sell a market that's going down. I mean, something that would appeal to a 6-year-old. And since, my mentality is about that of a 6-year-old, that immediately just hooked me. I really just saw the appeal of that because, it was like, how in the world could you juggle all of these different markets? I mean, if you just took one market like the cocoa market and try to understand the trade from Ghana and the export, and then the carry trade and the interest rates, it would take you about a month just to figure out what you needed to know. And by the time you knew it, the market would already have moved. And so really intuitively, what he was teaching me was that the markets are ahead of the events. The markets are the news. The markets are a discounting event. And so in like 1979, my dad put in 50 grand into an account and Graham put in $450,000. And by the end of the year, and you're talking about 1979, the account was worth $5 million, 10x. And I mean, look, this was an extraordinary time. This is when, interest rates went to 21%. It was the first time that gold ran to $1,000. It was the Bunker Hunt brothers were, controlling the silver market, ran to $50. Pork belly, soybeans, everything was running, crazy. So you probably could have thrown a dart in those days, much like the Nasdaq just in the past year, and made yourself a fortune. And so I was, coming out of college, wondering what I was going to do with the rest of my life. And immediately, Graham, put the hook in me, is that I wanted to learn how to make money in the markets. And so from the very early teaching, this very rudimentary closing chart, what we call technical analysis. So as opposed to fundamental analysis, which, tries to understand all of the information, technical analysis just looks at investments purely from price and time. So all I do is look at a picture all day long. I bet millions of dollars on companies that I don't even know what they do. And I'm not joking. In fact, the less I know, the better, because it makes me objective. And so I'm going to show you, how I make $1 million decisions just looking at the movements of the markets. And of course, it took me about 4 decades to try and piece together, because ultimately, you need to figure out something that is authentic to you, something that's going to overlay on your, personality, overlay on the way you can see things. And it took me about 4 decades to kind of piece together what I call this, 4-piece trading system that gets me closer and closer to, a high quality trade where, the risk is, the reward far outweighs the risk. And that's, after all, to me, the holy grail of trading. If you can figure out where to get in a trade and what your risk is, you may not win all the time or even every time, but you don't even need to win 50% of the time to make yourself a huge amount in the market. I can, when, out of a year, I could probably remember 3 to 6 trades that have made me most or all of my money. And then most of the other things, you make, you lose, you break even, and, you're just, swimming within the channels of the market. And so I just use price analysis on any market. So, I'm going to look at, stock markets. I'm going to look at oil markets, gold markets, currency markets. So irrespective of whatever you're trading, you can apply this methodology and this, understanding of the markets. And so I might be looking at an instrument that you're not trading, or you don't trade the stock market, but really what I'm trying to do, on this webinar series is, show you, a process, how I evaluate a high reward setup, and, how I mentally think through it. And, when I really kind of try to digest everything down to a simple nugget, all I'm really trying to do is take a piece out of the middle of monster moves in the markets. And this is really diametrically opposed to, I think, what a lot of people are doing. that are trading on short-term charts. They're trading on 15-minute charts, and then they're looking at some magic moving average, Bollinger Band overlay, and then looking at the volume, and then trying to, look at, when it crosses and try and, steal 20 pips here or a dollar here or a dollar there. To me, that makes no sense. And it doesn't overlay with my personality. When I see moves that extend where, gold over the last 6 months dropped from $2,100 down to $1,700, $400. All I really want to do is take a piece of the middle. And I took $200 out of that gold move. I was one of the only people out there telling our members for months and months, this thing has to go lower. And I'm going to show you why. It wasn't like something that I thought or something I read about or somebody talked. There was a pattern that was staking itself out very early on. And back in January, 3 months ago, once I understood what this pattern was, it was very, easy. I shouldn't use that word, to set up this trade. And I took, $150, $180 out of the gold market. And so that's what I'm trying to do. You see these monster moves all the time. Now, they don't happen every day, every week, every month. And that's the problem. The problem with most people out there is that they're so short-term focused, so instant gratification, that if they don't get a trade, today or tomorrow, then you're a scammer, and then they're on to the next shiny object. Where for me, it's like, those surfers that go out at 5 a.m. when the water's like a lake, and you're going, why are they out there? It's like there's no waves. They're just waiting and waiting for that one wave that they can take to the beach. And that's what I do. I wait for that one wave to start building, cresting, and then I can catch it and it'll take me to the beach. And I recently did that 2 months ago where I made 7 figures when the Nasdaq dropped out of the sky. It's been going up and up and up, and then it took like a 15% hiccup, and I took a sizable chunk out of that. And so, if I have to wait, the 3 months for the next move, that's fine with me. But there's moves all the time, mini moves, mega moves. All I'm trying to do is take a piece out of the middle of something that moves from one to the next. And so welcome to this live presentation, this 4-day, trade execution webinar series, day 1. Now I'm going to kind of show you, just take you through some of the trades that I've done recently, just to kind of visually show you, what my process is and what the outcome is. And then after that, I'll go, into the charts. I'll look at a couple things that, I'm focusing on today. And then I'll open it up to questions and answers. And we'll do this for, over the next 3-4 days. And, hopefully we'll learn something from each other. So every day and, weekend, I send out my emails to thousands of our members around the world. So, I know there's one guy who's always lurking on this webinar. He's a really negative dude. He's always posting negative things on my website. And, so, people say, well, this guy's just, a scammer, and he doesn't even show your account, and on and on. And I'm going to show you my account and everything I do. And the thing is, these emails go out to thousands of people. So, it's like one thing, that I could say this to you now, but, I sent this out to thousands of people who were witness to this email on February 21st, where this is the chart of the Nasdaq. And I'll blow this up, in bigger scale. I appreciate you can't see it at this point. But what I saw was what I call a key reversal price action. And what happened in that week where this red arrow is that the Nasdaq went to an all-time new high. But by the end of the week, it closed on the low of the bar. I call that a key reversal. But you can't just trade these key reversals in a vacuum. I noticed that key reversal was also taking place within an ascending, broadening price pattern, where you see these two lines that kind of splinter out apart from each other. And so it's, it starts out like narrow and then broadens or widens out at the top. And again, I'll show you this on a real basis. But my point is, I was looking at this chart on February 19th. So I sent out the email on Sunday, after the market had been closed for a couple of days. And I was really on on February 19th that I observed this. And based on what I was observing, I said, we're going to probably reverse here and go at least to the lower end of this ascending broadening, if not crack a good portion through. And so betting on my instincts, I put on a sizable bet on a leverage bet in a very risky way. And I don't, say that you do this in your first rodeo. But, what I'm trying to show you is that if you notice, things like this, you can make money. You don't have to do exactly what I'm doing. I'm just trying to give you an idea of, how these price patterns translate into, certain trajectories that once you understand them, then you can understand, what the trajectory is. One of the greatest quotes I ever heard, and it's a perfect metaphor, for this explanation is, one day the lights went out in the stadium during a hockey game, and the broadcasters thought, hey, this is a great opportunity to go down and interview Wayne Gretzky. So he sticks a mic in Gretzky's face and he says, hey, Wayne, you're not the fastest guy out there. You're not the strongest guy out there. How come you can do this magic that you do out there? And he said something that was, it's the most so profound in its simplicity. So what Wayne said, I don't skate to where the puck is, I skate to where it's going to be. So this is how, I interpret these patterns. By virtue of these patterns, the market shows where it is, but it also, by virtue of the pattern, shows where it's going to be. And so when I saw that Nasdaq chart, I put on this, you say it's a very reckless and aggressive bet. And I do this all the time. Some of them work and some of them don't, but all I need is a handful of them to work and I'm good to go, as you'll see in a moment. So what I did when I noticed, this price action on the Nasdaq, and I thought that it was going to translate to a decline, I started buying what are called put options in the triple Q ETF. Now, the triple Qs is an ETF that tracks the Nasdaq. So if you want to buy the Nasdaq stocks, you would buy the triple Qs. In this case, I thought the Nasdaq was going to decline, so I bet on the decline by buying an option called a put option. Again, it's just a bet that something is going to go down. Now, at the time, February 19th, when I was observing the triple Qs were trading around 334. So you can see that the strike price that I bought, the put series, was the 320. So that was way below 334. It would have required about a 7-8% move. And I had to be right within a week because I put these on the 19th, and you can see they expired 1 week later. So I might have been right about the move, but if I was wrong that it didn't take place in the right amount of time, I would have lost my entire bet. And you can see I wasn't shy. I bought 350 of these put options at an average price around $1. Now, each put is based on 100 shares. So you have to multiply this times 100. So, $1.04 times 100 is, approximately $104 times 200 is slightly more than $20,000. And so I bought, 100 more. That's another 10,000, 50 more. It's another 5,000. So all in all, I bet $35,000 on these very leveraged instruments that if I was wrong would have expired 100% worthless a week later. Now, the thing is, I did this twice because I did this exactly in another account I own. So I put on about $70,000, $80,000 worth of options that could have expired worthless the next week. But instead, I was correct in my analysis. The NASDAQ crashed, and 2 days later, the options that I bought for $1, some I got out for $5.85, some I got out for $5.75, $6.31, and some for $8.10, 800 times what I'd placed just 2 days earlier. So people say, well, why don't you show your live account? And this is just a screenshot. I can only tell you this is my live account. I would have to have a hell of a team to invent all of these prices at the time. So this is something I did. This is as real as a heart attack. I know it. And so, I can just tell you this is my own real personal trading account. So the account that I bet $35,500, 2 days later, I made a net $195,800 or a 559% return in just 2 days. Now, remember, I did this in another account, so I made close to $400,000 or $500,000 in 2 days. So once you get trading, the numbers are kind of nuts. And then that plays a whole other thing with you. And perhaps we'll talk about that. And, here's the fun part is that the following week, I reloaded and did exactly the same thing. Now, here's the difference. And the way you'll know that this is real is that I was doing this in front of a live webinar series, just like you guys are attending now. So this was the Tuesday, March 2nd. It was the second day of my live webinar series. And so the day previous, I said the NASDAQ's going to go down. I bet on the NASDAQ going down. And then each day we tracked how my bets played out. So if you think that this is all made up, this was done in front of thousands of people just like yourselves on March 2nd. So On the following week, after making $500,000 the week earlier, I reloaded because I thought the market still had, some mileage to go on the downside. And I bought 450 of these 307 puts, and I paid 61 grand. But you can see that by the end of the day or the beginning of Tuesday, I was down 50% in one day. And that's the problem with these leverage options, guys. You can lose most or all of your money very quickly. So you can see I was down about 50% on these things on Tuesday. And all told, I was down about 24 grand on all these bets. I was short Beyond Meat. I was long another put series, and I was also long the SQQQs, which is a bet on the decline. So I was betting on the decline from every angle that particular week. And you can see again, on that particular day, I was down 24 grand. By the next day, I was 142,000 in the plus. So $165,000 swing. And you can see these options, which were $28,000 in deficit, went to a $60,000 gain, almost $100,000 swing in one day. And then you can see I had 450 of these. And you see by the following day, I'd taken profit because there's only 150 left. And my account exploded from a deficit of minus 24,000 on Monday to over 350,000 plus, the profit taking that I'd already taken. And I made about another $500,000 that week. And so in the space of 2 weeks, I made 7 figures based on a chart pattern that I saw on the market. Now, these patterns occur all the time. So this was a setup in gold that I was alluding to earlier, where this was an email that I sent out to our members January 10th. So 3 months ago, and you can see it was right in the middle of the move. It was right when gold was around $1,900. And it looked like, well, it could look like anything. It was just in the middle there. It was up and down and nowhere. It had gone and made a new high. But by virtue of the structure that I, built around these prices, I was hypothesizing that this was my potential target. Now, I'm not saying this in retrospect. I sent this out 3 months ago to thousands of our members. And at the time, I was suggesting selling gold in the mid 1800s based on ascending, broadening price triangle, where you can see these two lines going divergent things. It's the same pattern that the Nasdaq did a week earlier that I made 7 figures on. And I said at the time, my target objective is 1,700. Now gold went to about $16.71 below my target objective recently. So based on that bet and another bet where I said, again, based on the same ascending, broadening price pattern, sell a hair under the $1,800 level, I put on these 2 trades, one at 1841, one at 1795, got out at 1687, and this was a cool 6-figure profit based on that analysis. A few weeks ago, this is one of my favorite trades. It's a difficult trade. Pound New Zealand dollar is kind of a stealth bull market. I've been, buying this thing in waves and also selling it, but mostly buying it. And I did a webinar series last week where I said, this is going to go higher. And that week, Pound New Zealand dollar crashed like 200 pips, but from a high. It went from like 198 to 196. And so, I'm still holding these trades at 193, and I still think it's going to go higher based on all of the principles that I spoke about in this email in February. So based on this email, I sent out 193.37 the Pound New Zealand. We can look at Pound New Zealand. I think it's still going to go higher. I was looking at those open profits, which were then substantially diminished last week because Pound New Zealand dollar contracted, and I kept all of these trades because I still believe in the trade. A couple months ago, a day after I had major surgery in New Jersey, I was staring at this chart. I was saying, look, I really can't trade. It's too much stress. I opened up this chart and I said, I cannot not trade this thing. This is something that I was waiting for 3 months. I was telling my wife, looking at this double bottom in the stock Lyft, ticker symbol LYFT. I said, this thing's going up, and at that time it was like the second cousin to Uber. Nobody was talking about Lyft. And I said, this is a pattern that I really understand. So when it swung around and gave me an opportunity right here, I started just levitating, into this thing. I was buying the stock, between 45 and 46. And I was also buying the call options, which are a bet on the upside. Now, my stockbroker doesn't provide a fancy P&L where it shows where I bought and where I sold. And so you can see the offset. And so, I've got to create this, crazy spreadsheet. But believe me, I would have to have a hell of a team, to make up this spreadsheet. This is right out of my personal account. And you can see I was buying Lyft shares at 45.68, 45.20, about 5,000, 1,000, bought 2,000, 1,000. I day traded these 3,000, but I was buying Lyft in the, around 45.60. Today, the stock went to over 65 at one point. And I bought a ton of these things. I bought 7,500 shares at 46, sold at 58, and I pocketed about 90 grand on the shares. And then right at the time that I was seeing this setup, that I bought the shares, I also bought the call option. So this is the $46 call option. And as opposed to a put option that I just showed you, a call option is a bet that something is going to go higher. And I was buying these Lyft calls for 92 cents, under $1. And you can see I sold them for $7. So about a 700% return in about 4 days. And then simultaneously, I was so energized about this stock, I also bought the $47 calls. So I was buying the stock, the $46 calls, the $47 calls, and got out of those at $6 and made about 600. So all told, I don't even know what I made in these things. And I know it sounds crazy, but I don't really look at the profits I make or the losses that I make. I just move on to the next trade. All told, I must have made 300-400 grand in this trade. And, it sounds crazy, but I just look at the purity of the setups. I don't really, if I'm right, the money will come. And if I'm wrong, I just get out, take the loss, and move on. So this is just kind of give you a flavor for what I do, how I do it. And now I'm going to go into the live market and show exactly how I look at things, what I'm looking at now. And then, we can do a bit of a question and answer. So, I'll pick a couple things from the stock market, maybe some things from FX, and then, we can have a discussion. So this is my stock trading platform. So there's two stocks that I'm looking at. One that I like on the downside and one I like on the upside. So I'll start off with the one I like on the downside. And for the stock that I like on the downside, I will short that stock, which is a whole kind of a process that your broker does for you. But just for sake of, this discussion, it's a little bit different than the FX market, where if you sell something in the FX market, sorry, I never know where to position this out of the way. Well, I'm just going to capture that. So this is the stock of Zoom, the ticker symbol ZM. We all know this is the very popular, telecommunications platform that made our lives a whole lot easier, during the pandemic. And this is why I say you really shouldn't be caught up in too much on what the company is or what it does, because you start attaching an emotional affiliation with it. I just try and look at price objectively. And what I see in Zoom, and I've been shorting Zoom for a long time, shorting again is the concept of betting on the decline in a stock. And so again, even if you're not trading stocks, if you're not familiar with shorting stocks, you don't want to short stocks, really on these few days, what I'm trying to do is show you an analysis and a thought process that you can apply to anything you want to do. So if you are short, if you sell FX pairs, you can apply the same kind of analysis and thinking. And really, it's all based on, to me, patterns and price action. So right at the top, when Zoom made an all-time new high, it went to $588, backed off, made another high, and then we made this M top. Now, it doesn't really matter that the one top is lower than the other. I think we would all agree, if you stand back, this looks like the letter M or M top. So this is a double top. And with the word top in it, what that means is that the price leading up to this high, the market was going higher. And if a market is topped, it's going to do what? It's going to go lower. And since that top at $520, it's been doing nothing but going down to $320. We've gone down about 40% from the highs. So you can see how if you identify a pattern like this in corn, soybeans, or the euro yen, it doesn't matter. It's going to have the same implications. And that's all I look at is market structure and try and come up with a hypothesis about the future trajectory. So once I understand that a market has put in a reversal pattern, then I try and get in sync, consistent with that reversal. So in addition to this double top, we also have another bear price pattern in the form of a head and shoulder, which looks just like a man or woman's left shoulder. The peak would be the head, and that would be the right shoulder. And you can see now it looks like a head and shoulder. So this is also a bear price pattern. And you can see whatever you call this, one thing, once this thing crossed the neckline, which is simply a line drawn the pattern, this said this is going lower. And that's exactly what it did. So to me, these patterns take the mystery out of where something is going. And then all I try and do, once I kind of understand what the game is, try and get in sync with what the trade is telling me. Now, you can see that in the more recent times, Zoom, while I still think it's going lower, it's gotten a little bit complicated. It's just gotten all bunched up here where, it just hit this support zone. But since I understand that this thing is primarily in a downtrend, every time this thing pokes its nose higher, every time it goes to 330, I short it. Every single time. One day I shorted it twice. I came in short above 330 and it went to 321. I had 3,000 shares. I made $27,000. And then about 10 minutes later, it went back up to 330. I shorted it again and went back down. I made like $54,000 in a day, just trading Zoom based on an identifiable price pattern. So now we are in a clear downtrend. We start off with a bear price pattern, and then we have this, downsloping, descending wedge. Now, these descending wedges can be, they're neutral. You can either break on the downside, or you can come out here and you could have a shorts covering squeeze where you could come out the top here. And, full disclosure, I came into, Zoom short today. I was making a whole bunch because you can see it just opened lower, opened like $5 lower. I was, short about 6,000 shares. I was making like 30 grand on the opening. And you can see it kind of came back and closed about even. But, I just don't think that this has a lot of gas in the tank. And so I stayed short. And so you could continue to see this thing. But eventually, if we break this thing, there's a lot of room under here. So, whether it's now or at some point from now, Zoom is going to go for a big fall. You can see that basically this neckline crosses the entirety of its pattern going back about 8 months, and you don't have the whole history in your full view here, but it's literally sitting on a ledge. And so this may, continue to back and fill. The market still looks, somewhat strong here. You may even get a short covering thing, but eventually if we come down here, you're going to see a huge move to the downside. So, right now it's kind of all bunched up in here. I don't like to see a trade close on the high of the day. So we'll talk about these bars and these reversals, but I don't, consider this a full-throated reversal. I just think that this is, coming down in, in a cadence of lower highs. Each burst to the upside is lower than the last. So even if we get another one up here, I'd probably short some more, because that's just the behavior of this thing. But, there is every chance that, or there's a possibility that you could get a short covering rally. If you come to this thing, you get a small move to the upside, or even a big, sometimes these moves, because they create a vacuum where you try and, push it lower, 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 it won't go. And then, creates a vacuum. And so, I kind of, it's very nuanced discussion, very difficult to explain everything at one point. I'm trying to just, show you the basic concept that this is in a very bare price pattern. And at some stage, this thing is just going to go off a cliff, whether it's now or later. In the meantime, I've just made a fortune. Every time, this thing rallies, I short it. Because to me, this is what I call the governing price pattern. So this double top head and shoulders, to my mind, is going to govern or dictate the price of Zoom, going forward. Now, there's all kinds of times, where you get moves higher, and you could get another move higher. But, every one of these things, is should be shorted by virtue of the prior governing price pattern. So once I understand a pattern that is governing or dictating a market, then, I have different ways of getting in sync with that market using what I call, my insurance day bars. And so what is an insurance day bar? To me, it's a combination either of a key reversal and And one more thing is that you can see that I don't look at candlesticks. I look at a bar chart. And the reason I look at a bar chart is, to me, because these bars and how they close. And so this is a daily chart. And this little hashtag to the right is a representation of how that market closed. And I think we could all agree that this market, if this were one daily trading session, closed closer to the low than the high. Now, I don't look at that reversal in a vacuum. I look at in context with the trend, the pattern, the whole thing. But once I think I understand the pattern, the trend, and then if I see a key reversal like this, then I know how to get in sync with that chart. And it's also the same on the other way. The market closed on the high of the day. It's a key reversal to the upside. So you can see here was, a combination where you had a mini double bottom in this bear market. So you had the pattern there, this area where you hit it twice, and then you also had this key reversal where you made a new low and closed on the high. And for that moment, this is what I call a counter trend trade, because it was going counter to the main trend. But I still will trade a good counter trend trade. I mean, you have a little double bottom here, and from whatever this was, 340 to 450, that's a nice move. But what I'm trying to show you is just this key reversal, how it closed from made a new low, closed on the high of the day. But it's also in the geography of where it did that double bottom. So, and here was just the opposite, and this was the real trend move. And I don't want to go too far in the weeds, and I appreciate that I might be. So here was an interim double top in the direction of the major trend. So once I see that this is the real trade, this is the counter trend trade, and this is the trend trade. And you can see this monster key reversal, made a new high, close on the low. And you can see the size of that bar. And once you see that this market is over, I mean, it may tread water, but this thing is basically pointing where this market wants to go. So I use a combination of patterns and price action to get me in the direction of the trend. So I'll just use these explanations. I appreciate if you're new that this could be just overwhelming and unfathomable, but hopefully the more I show you, these examples, you'll come to, maybe just peripherally appreciate it. So now, we're at an all-time new high in the stock market indexes in the United States. The Nasdaq made an all-time new high, but at the same time it made a new high, you can see that Zoom is trading 40% off the highs. So just because an index is saying something, doesn't mean that it applies to everything that you're trading. So I short a lot of things, even though the indexes are, going higher every day. I have a field day of going short certain stocks that have come off 30 to 50% while the index is making a new high. And so we have to look at each stock or whatever instrument we're trading in a vacuum. You can't trade gold like silver. You can't trade oil like the Canadian dollar. You can't make these correlations. You have to look at what you're trading and look at the risk reward of the setup. Now, another stock that has been on my radar, and I've told our members to go long for quite some time, is the stock of WRK. And you can see today we broke out to almost a new multi-year high. I actually bought more today, full disclosure. And why was I saying, to buy WRK all the way like several weeks ago? Because it was based on, sorry, I don't know how to get this guy out of my picture here. So this is the stock WRK, ticker symbol WRK. And it's, a very unsexy kind of conglomerate type thing. I think it's in infrastructure, which is, obviously a hot topic right now, but I don't care. I don't care what the company does. In fact, right now I'm looking for unsexy companies. I'm not looking for the high flying technology and things of those nature. And this really, fit the bill for everything, what I'm looking for right now from a standpoint. So look, I mean, if you look at this historically, you can say, wow, this is just, this big wave. How can you, make sense out of this? How can you try and make money out of some meandering chart like this? Well, once you see this, I try and dig within the prices and see if I can see or discern a pattern and a set of price action that I can start, creating a risk reward scenario. So this really stood out to me, where you see this double bottom. This is, again, the opposite of Zoom, which made a double top. This was, you made one low, you retested that low, and when you come and take that out, that neckline, you can see, as opposed to an M top, now you have a W bottom. And if a market's bottomed, what is it going to do? It's going to go higher. So these patterns tell you where this thing is going to go. And so instead of trading in and out of these price bars for 30 cents or 50 cents 10 times a day, what I try and do is identify a pattern and then hang out in that trade for a week, a month, 3 months, as long as that trade will have me. And now, just like Zoom, in addition to the double bottom, we also have this inverted or upside down head and shoulders. You can see this is the left shoulder and this is the right shoulder, and it's all connected by this neckline. And you can see several weeks ago, it broke out of that. So now it broke out of this double bottom, it broke out of the head and shoulders. This is a breakout. And now for the past several weeks, it's just been huddling in this zone between 50 and 54. And today, we're starting to poke our nose outside the top end of this zone. And now there's just going to be blue air. Once this thing clears here, there's just going to be sky for this to go into. So this is an example, two examples. One where, I think a stock like Zoom is going to go lower, and another where I think a stock like WRK is going to go higher. And I'm not looking at their balance sheets. I'm not looking at their earnings forecasts. I'm not doing any MIT, gymnastics here. I'm simply looking at a set of price patterns and price action that then suggests how I can get in sync with this trade. And you can see buried in here is this very big, what I call key reversal. Now, this is a weekly chart where you can see earlier in that week, it went to a low, flushed out all of the weak hands, and then closed at the high. So now that bar tells me where my risk is. If I get long here, meaning if I want to buy this thing anywhere, somewhere in here, this tells me exactly where my risk is. So this is my risk, and that's my reward. And to me, that's the holy grail of trading. If you can set up a trade where you understand where to hop in on the continuum. So if you put your buy stop above here and your stop loss here, now you understand where I'm going to get in this trade and what my risk is. And so I guess the next question you guys are going to answer me, well, where do I get out of this trade? Well, I don't get out right here where it's made me $1 or $2 of profit. It may look good, and then, you see it coming back and you get frightened and you hop out. Once I see this, I stick with it. I think you'll see new highs. I think you'll see it above $71. So maybe I should just pause here, just see if there are any questions. Do you see does this analysis make sense to you, jump out to you, see how that it maybe put you, on the path to more consistent profitability and bigger profits? And again, so what I'm saying is that if I can, see a path here to make $20 on this stock for maybe a $3 or $4 risk. So I have a 3-to-1, 5-to-1, 6-to-1 risk reward. I don't need to do this and this may take, another 6 months to accomplish. But if you can make 6-to-1, can you see how that's, a lot different than trying to carve out, little bitty trades, 10 times a day? Maybe it's not that fun, but this is the way I make huge money in the markets. I look at something as simple as this, and then I back up the money truck, because increasingly more and more, as this thing's poking its nose at the highs, it's telling me that there is very little risk in this thing. And sometimes I get to the point where I understand there's almost like no risk in something. And so if I feel like there's no risk, I just back up the money truck to something like this and just blindly now I shouldn't say you should do that. I know what I'm looking at. I know what I've looked at for years. I know when I see something. Oh, so can you make your charts timeline at the bottom? I didn't realize this was, but in a way, this is all you need. But yeah, I see that the timeline's not at the bottom. This is today on a weekly chart. You can see the timeline's all the way down here under the volume. And I don't even look at the volume. If volume's been going down while this thing's making a new high. So what am I supposed to conclude from that? Nothing. Ronnie says, how many pips do you put your stop loss? It really depends on any given trade. It really depends on the trade, what the objective of that trade is. If I'm just trying to carve out 150 pips, I might risk 50 pips. If I'm like pound New Zealand, that is like a, bucking Broncos, 300 pips each way, every 15 minutes. If you put a 50 pip stop, you're just going to get lit up. Although today, if you put a stop under the low on pound New Zealand, I don't think, you're going to get taken out. Jackie said, did you buy stock or stock options? So the options were very thin, Jackie, so I bought the stock. I wanted to buy the options, but they were very thin and the spread was very wide. And so the minute you buy the options, you're down about 40% on your money. And let me show you what I was talking about. So, I don't claim to be an options expert. I just look at options as a very leveraged way to play something. And unfortunately, the options for Zoom are so expensive that I have to use a huge amount of money just to short the stock. So let me go to WRK and I'll show you what I mean. So if you go to the options, let's say, okay, it's trading at 54. You're looking at the 55s. The volume is just starting to pick up. So there's about 2,280. So this expires at the end of this week. And, I was looking at this at 15 by 25. But you can see the bids only moved to 30. So you can see the huge, as you buy this thing, you're losing 25%. And the volume is starting to pick up, but there's not really a lot of volume here. So as much as I like this thing, I may buy the options. I really wanted to today, but you have to make sure that I think the time is right to start buying these options. And the thing about options, you have to be right, and you have to be right now. Now you could go to the next forward series, which is a full month or so, and that's probably the way to go. So the May 25 options, and again, I'm probably losing a lot of people here. See, they're $2. So that means that WRK has to close at $57.10 in a month for you just to break even. If it closes at $56.90, you lose all of your money. And so now you have to say, in order for me to make money, and if I'm going to play options, I want to make 3, 5, 10 to 1 on my bet. So then I have to say to myself, can I see this thing going to 6 or 8? Meaning, can this thing be at 65 or 70? I think it can, but it's tricky. I mean, I see, I look for things where I can buy them for 30 cents and get out for $3, and I've done that. So it just comes down to a feel. So I ended up buying the stock. To me, the stock is just a no-brainer. So let me go back and maybe take some questions here based on just the analysis that Andy says, hi, Mark. What would be the best advice about holding onto winning trades and not getting out too early? My trading is good as in marking my setups, getting good entries, but I struggle with holding. And I think, Andy, if you ask, 9 out of 10 people here, everybody would say the same thing. And so people say to me, how do you have the balls, the courage to stay in trades as long as you do? I'll show you an example of a trade. Where I stayed in 3.5 months. I stayed in £1 New Zealand trade for 13 months. And so the question is, how do you do that? Well, to me, the pattern tells me, price tells me everything I needed to know. So, and I'll put up the price chart of this in just a moment. You can see on this particular trade, actually, I sent out an email on the I think it was the 23rd. You can see this trade was triggered on the 25th. But I put out the trade to our members on the 23rd. So first off, this trade went out to thousands of our members. So it's not like I'm just showing you something and I picked out of my nose here. It went out on the 21st and it got triggered 3 days later. And that's also the other thing about my methodology is that after all of my analysis, I require the market to confirm what I'm doing. So by requiring the market, I put a sell stop underneath the market that I want to sell or a buy stop above a market that I want to buy. And it requires the market to put me in. And so while I was correct about this, it took 3 days until the market triggered me into this trade. And it was a sell stop at 111.61. And it was on April 25th. And you can see my take profit was hit 650 pips lower, but it was 3.5 months later on August 12th. So how many of you guys think you can sit in a trade from April to August? Not easy. But this pattern told me where this objective was. And I was telling my members throughout that 3.5 months, this is what I'm holding out for. And I'll show you in a minute why. And this is, again, is another example of the difference between in and out trading and holding one trade and making 300 grand. So I put on one trade. Yes, I sold 51 lots. It was a big trade. I had a lot of confidence in that trade. But I made one trade and got out 3.5 months later. Now, I did incur what are called swap fees. These are fees over and above the commissions that your broker charges you. So you can see, yeah, I paid a fortune, $46,000. But net of those fees, I still ended up making 300 grand. But I only made one trade. Now, this is in contrast to, if you make 5 trades a day, 25 trades, 25 days a month, you're making 125 trades. I made one. And then you have to multiply this by 3.5 times, right? Because this is on just 1 month. And then your broker's charging you 2 to 3 pips every time you trade. So let's say this is a normal lot, 125 trades times, 20 bucks, playing $2,500 per month, going in and out 5 times a day. So then you got to multiply this by 51 lots and then times that by 3.5 months. And that comes to an enormous number. I don't know what that is, 350 grand or something in underlying commissions, where I paid 46,000 and sat in one trade. So it ends up being a lot less expensive. You guys don't understand when your brokers are charging you 2 or 3 pips and you're going out 5, 10 times a day, you're paying this cost. You don't see it, but you're paying it. So yes, these swap fees are huge. You can see I paid all these trades. I made all these swap fees, but including the swap fees, that's what I made. Now this was in the dollar versus the Japanese yen. Now, why was I so comfortable doing that trade and sitting in that trade? Go to the dollar yen, go to the weekly chart. Now, whenever I put on more time, it used to be more streamlined, but this is taking, this may hopefully, okay, cool. It's taking a lot longer to load last week. Now, this is like Zoom or WRK or, both of the things that I just showed you. It doesn't matter what this is. This is dollar yen, but it looks just like Zoom. This looks like just like the Zoom chart I just showed you. So you can see that these patterns reoccur on any instrument, whether it be orange juice futures, pork bellies, the dollar yen, or Zoom. The analysis is really the same. Actually, it's exactly the same. So just like Zoom, this made a double top in 2015. Went to a high of 126, backed off, retested. When it fell through here, now you have this M top. You also had the head and shoulders. So this just, I actually didn't put it together, but this looks just like Zoom. So this is the governing price pattern. This has been my cheat sheet, my trading for dummies pattern for 6 years. Now, this is why people say, well, can I do this on a 1 hour chart or a 4 hour chart? The thing is, if you're looking at a 4 hour chart, you're not seeing this pattern. You're seeing something that, anywhere, market can go anywhere in the next 15 minutes or the next 4 hours. I'm looking at a weekly chart going back to 2014 to get perspective. So when I trade a market, I want to see the forest for the trees, because I'm not trying to carve out 20 pips or 30 pips or 50 pips out of a single bar here. I'm trying to capture, big moves in the market. And in order to do that, you need to have a higher time frame to understand what is this market telling you. And so to me, those governing bear patterns tell me that this is in a bear market. You can see that this has just been going down for 5 years. Not easily, it's been a stealth bear market. Now, since that double top, head and shoulders, you can see that we formed this descending triangle. Now, once I understood what the game was here, where this was a bear pattern, and then I saw the racket that was going on here, where this was just lower highs. Every time this thing, sold off, it rallied, made a lower high. Every sell-off was a lower high. You can see it's just a sawtooth, and I believe this is what it'll eventually look like. So how can I predict something so far in the future? Because the pattern tells me. So now once I understood, all this racket, that this was just a case of, these lower highs within this descending triangle, when this thing rallied from here to here, I wasn't like, whoa, this thing's taken off, I got to get on board this rocket ship. To me, this was just, an opportunity where, I smelled an opportunity where I saw the double top price pattern along this descending thing in this bear market. And it was this price bar right here. It's very hard to tell on this chart. But we had what I call a narrow range bar. You can see that weekly, and that was a weekly bar. It's the narrowest weekly bar that I've seen going back decades. And the significance of that weekly bar is that this indicated that this rally was tiring out. What this said, that this thing was rallying, and then it got to this one little thing, and it was starting to run out of steam to the upside. And it was also very near this resistance level, and also where we have a double top. So you had the resistance level, this bear pattern, this double top, and everything in my water was telling me that this was just a go to the bank trade. And you see these sometimes, and this is where I just back it up. I did 51 lots on this thing because I didn't think I had any risk in this thing, and I didn't. After this trade was triggered, I never saw a tick of heat. So, and this is, a good example of my execution methodology, where after I see a setup, the double top, the inside bar, the narrow range bar, then I put my sell stop right there at 111.61. Now, this is a great example of how this thing the following week, after I sent out my email to put a sell stop there, actually opened and started going higher. Now, the beauty about putting a pending order underneath a certain strategic point is that if you're wrong, you don't pay the price. My sell stop would have been there. If the market went up, no harm, no foul. I would have canceled it by the end of the week and looked for something new. But what happened was the thing went and made a new high, turned around by Wednesday, put me in the trade, and 3 months later, I made a mound of dough. But, here's the distinction. Very easy to say, well, you can see it here, but very difficult to sit through these trades. So once I saw this double top here and I saw this descending triangle, I said, this is what a descending triangle is that you have a litany of similar lows against a pattern where you have lower highs. So once you understand what the pattern is, I understood where my objective is. I was saying right up here to our members that we were going to come to the previous December lows, which was around 104. So even up here, I was saying we have to go to 104. We have to go and retest this area again. And so again, much easier said than done. I put on the trade at 111.61 and away we go. The market just fell out of bed right there. And I was up 250 pips on 51 lots. And then the market went up on me 150 pips. And so now, you're sitting in my spot, you're saying, I don't want to give back everything. I got 51 lots. I don't want to look stupid. I'm still making money, blah, blah, blah. And you get out there and whatnot. But I was holding out even here that we had to come there. Now, it was even harder when we got to this area where I knew we would dig in. So you could see this thing came cratering down, and then we had what I call this key reversal. You can see right here, market made a new low and closed on the high that week. And I knew that was trouble. I knew that would set in, a low for, a good period of time. And for 7 weeks thereafter, I had to watch this thing go sideways to higher. So now all that money I was making down here on 51 lots, plus I shorted many more, now I'm losing all of that. And I said, you know what? I'm a purist. I'm holding out for this. And so it sounds, like, well, a bit of magic. But I've been looking at these charts for so many decades, I can kind of draw them in my sleep. I can kind of like Gretzky. I don't look where the puck is. I kind of look where it's going to go. And so I held out for that trade. And so this is one trade that I stayed in from April to August. And so you don't need to be trading in and out every day. This trade was working for me every single day. The market was working for me while I was playing tennis and getting on with my life. And that's the distinction. And it's, it's not for everybody, but, after many decades of trying things and losing a lot, I kind of figured out what works for me and what, I want to achieve in the markets. I want to make a lot of money in the markets. I used to like having a lot of fun in the markets. I like the jazz and the stimulus just like everybody else. But I figured I prefer taking it. And so all I'm looking for is a piece out in the middle. Now, in this case, I took every chunk of it. I got in there and I got out there. Typically, if I see these moves, all I want to do is take a piece out of the middle. If I can take 300 pips out of a 500 pip move, I'm happy. And that's really what I'm trying to do. I see moves like this. And so I think we could be now at a point where we're ready to come back down here, and this could be a big move. This is just a fake out above here. I think this is a bear trap. And I think, we're going to come back down and do that. Maybe. I don't know. We'll have to see. It's not really developed yet. Daniel says, this is the hardest part for me, to sit on my hands and be objective, and adding to trade lower is not imaginable. So, I think at the end of the day, you got to sit down and have a chat with yourself and say, what is my objective, with trading? And everyone would say, well, that's easy. I want to make money. But then if you dig, look under the hood, and see what the real reason is, maybe, you're looking for a distraction, you've got a family crisis, or you got something there, or you're looking for just a vacuum where you can just, sit there and, play lotto. You like the bump, you like the rush, you like the action. Everyone here does. And I would say, if you like the rush, set up 2 trading accounts. Set up one for your fun money and one for your serious money. But you have to first sit down and say, what is my objective in trading? And if you say, I want to be a consistent, profitable trader, trading in and out 5-10 times a day, not going to happen. Now, that's not my opinion. It's just look at the statistics. You know, it's estimated that 90% of people lose their money, certainly in the FX business, within 3 months of opening their account. I think it's probably 95%. So you ask yourself, well, how is that possible? If everyone's basically doing the same thing, they're using some newfangled whiz bang, you know, turbo expert advisor with some moving average, you know, on, you know, because if you're playing on short-term charts, if you're looking for short-term carve-outs, if you're looking for 7 pips or 15 pips, 20 pips, 30 pips, and you're trying to do that 10 times a day, you know, yeah, you may be successful for a week or 2, 3. You know, do you think you're going to be successful for the 3 months, 6 months, 9 months? No. And instead, what I try and do is try and find one trade. I make 650 pips in 3 months. It's a whole different way of looking at things. And, you know, it's not easy because, you know, as traders, we have to justify our existence. You know, we hear every day, we tell our friends we're trading, we tell our wives trading. So what happens if we do no, you know, we don't do a trade this week, we don't do a trade next week, you know, but we do a trade a month from now and we can make 6 figures from one trade. What does it matter? It's just, you know, trading is not a verb. It's not an activity. But, you know, most people treat it as such. Pete says, what percentage of your account do you risk on each trade? So I would say, you know, certainly if you're a beginner and, you know, certainly for vanilla trades in and out, you know, you shouldn't risk more than 0.5% to 1%. So if you've got a $10,000 account and you risk 0.5%, that means you're going to lose $50. So even if you have 5 losing trades in a row, you're going to lose $250 or 5% of your account. You're going to have, you know, 90% of your account still there. But most people are risking, you know, 2, 3, 5%, you know, on an individual trade. And then a random set of trades just wipes them out. And what you can do, and what I showed you in this instance, was that I build my trade. So once I kind of feel like I have, you know, I'm onto a winner, you can see that I started, you know, selling here at 110.5, 111, 111.61, 11.46. I sold a little bit more at 108.27 and even more at 109, 107.95, knowing this thing was going to, you know, 104. And each ad will be a little bit different. The objectives will be a little bit different as you go into it. But so you can build into a winning trade. So you can see on this 650 pip run, you know, that I added multiple trades, you know, and made the market, you know, pay for that. So Af says stock analysis is valueless at this point. It's 100% gamble at this time. Well, you know, everything's a gamble if you don't know what you're doing or what you're looking at. That's absolutely true. So Kirby says, good stuff. One question on the double tops. How much time do you give between the tops or bottoms? So it really, you know, the tops can be, you can see that this top, you know, was this space apart and this top was, you know, much narrower, but they were two tops, you know, and this top was even wider. So it doesn't matter. It's, you know, a top is a top is a top. If it's a top, the market will follow suit. But, you know, the trick is, you know, I always say the market is like a magician. It always hides its true intent. And so the market throws you patterns all the time. And then we've got to figure out which is the real pattern and which, you know, is not the real. And that is the trick. That took me a long, long time to figure out. Because when I was young, I'd whip out the textbooks. I'd look at, you know, all the everything I'm saying, you can find on the internet. It's the way I've kind of pieced together everything. And then also kind of trading so much and experiencing so much where I've lost, it's trading, not only understanding what the opportunities are, but where the pitfalls are, where the potholes in the road are, because that's what the market does. It makes you kind of gives you a look, and then it's not what you think it is. And so to me, it's separating the true patterns from the fake out patterns. I'll give you an example of that. And this was a discussion I had last week. A lot of you were here, you'll know what the discussion was. And I was adamant. It's like we saw this double top on the pound New Zealand dollar. It was a double top for the time that we saw it, but I said, you know what? This thing's going higher. So, if some of you were on this on last week, you'll appreciate this discussion because we were having a discussion just like this. So here is the pound versus New Zealand dollar trading. I should have put on a longer time horizon and even the weekly. But for the purpose of this, you can see the pound New Zealand was coming down for a long time. And probably to put it in perspective, I should have showed you the weekly. But right here on the daily, we had this double bottom price pattern. Just like WRK or whatever the bottom market is that we've been looking at. Bottom where it makes a new low, backs off, retests the low, and now you've got this W. But here's the thing, and this is what I was saying, is that even when the market gives you a signal, it's like a magician. A magician doesn't just jump on stage and pull a rabbit out of the hat. He wants to keep you in suspense. He wants to give you a misdirect. So he's having you look over here while he's pulling the rabbit out of the hat here. So after this double bottom was formed, I was saying to our members, this thing has bottomed. But I said by virtue of how far this fell so quickly, it's not going to just bottom and go straight up. Markets don't do that. They need to build space away from that wall that they came down so they can build an equal and opposite wall. And again, this is 40 years of just instinct and trading and figuring this out. And so, right as rain, for 2 months after I said we bottomed, this thing just went up and down 300-400 pips, every other day. So if you had a 50 pip stop, 75 pip stop, 125 pip stop, you would have been taken out. I just see some of this stuff, and I hate to say it, I don't even put a stop in these things because I don't want to get taken out by the noise. So once I saw this thing bottomed, I just got myself all situated here. I bought this thing and I'm long, and I actually started buying up here. And then last week it came cratering down on me. So I haven't even looked. I might be slightly ahead by now. It doesn't even matter because I think this thing's going to go a lot higher and I'll make a lot of money a week from now or a month from now. The market goes up in its own sweet time. But this was the discussion. So to me, this was the real pattern. That this double bottom, if a market is bottomed, it means that it's going to go higher. But then right as this webinar series started last week, people were saying, well, isn't this a double top? And I was saying, yeah, it is. But I don't think that double top's going to be real. I think that eventually, it'll just get taken out by the real move. So, that is kind of the distinction, or I think the value that I bring to the table is kind of understanding what's real and what's not in the market. And so to my mind, all we did really was hit this resistance level. You can see once a market kind of goes to one level, and sell off, when it gets there, it usually does the same thing. But I think that this is a buying opportunity. I would simply put a buy stop above today's high, a sell stop above, a stop loss below today's low. This is your risk, and I believe that will be your reward. And I said that a week ago, and the market kind of cratered a little bit more than I thought it would, but once I start seeing a pattern that tells me a market's bottomed, then my mentality is I'm in this thing for, a month, 3 months, 6 months, whatever. I'm not getting out. I'm not getting out. Now it sounds pig-headed and whatnot, but and I was saying that at the time. I was saying, okay, if this is bottom, then if this is top, then I gotta draw a picture in my mind and visualize this thing being a short, right? If something, if you get out of something that you're long, then, you should be able to make a case that you should go short. So this is the weekly chart. And again, it was this pattern all the way 5 years ago. That double bottom, when it came careening down, made an all-time new low, backed off the low, retested, made this double bottom, made this rounding bottom. This to me is the governing price pattern for pound New Zealand dollar 6 years later. So I'm trading this based on this, not based on last week's, yeah, you had, a little hiccup there. Looks terrible. If you're looking at that on a 15-minute chart, it looks like a carnival ride that's, just gonna, go straight into the ground. That's why I don't look at a 15-minute chart. So once I figure I understand the game here, then I can see here's another double bottom, and here was the weekly bottom, which was the same as the daily bottom that I showed you at 185. So now I figured there's a bottom under here, and this thing is just going to figure a way to go higher. I don't know how it's going to get there. It's not elegant. It's going to come off in these, things, but I'm just going to sit in here. So this is a trade I'll just sit in. I won't watch it every 15 minutes. I don't even need to watch it every day. I'm going to think about where this thing's going to be a month from now. So in addition to this pattern, I also saw a sequence of this price action where you can see these key reversals. Made a new low, close on the high of the week. Made a new low, close on the high. And these bars are pointing where the market wants to go. But just because these bars and these patterns point, sometimes it can just take a while to get there. So I'll just stick around and wait for it. I'm trying to see some of your comments. So Majid says, thank you, Mark. After 3 months of being in your webinars and reading your books today, I understand more and feel the need, and I feel I need more to learn and master trading. So thanks for that, Majid. So let me see if there's any other questions here. So Niall says, do you look for tops and bottoms on the weekly time frames? So no, I look at the monthly, the weekly, and the daily. And the reason I look at these longer time frames is what? Because I want to capture the bigger moves in the market. I want to just take a piece of the middle. So you see all the time, market moves from 218 down to 190. That's 3,000 pips. If I can just take a piece of the middle, take a piece of the middle, take the piece of the middle out of something. That's what I'm trying to do. So once I understand the price action, the patterns that's pointing in a certain way, I can get on board and take out my fair piece. Now, I just get the feeling that we're just going to get one of these, that I could be in this trade for a long time. So why I look at the bigger things is I want to understand what the real game is. And you can't understand the real game if you're looking at a 15-minute chart. If you're looking at a 15 chart, the pound New Zealand, it's up, down, and sideways. Your head would be so confused. You'll be, long in the morning, short by noon. Look at this thing. Here's a perfect head and shoulders. Okay, so now you're short, but now it's right back to where you shorted it. So yeah, patterns can last as a 15 minutes. Maybe you play this for a few pips, but you'll end up blowing out your mind and blowing out your account. And so I'm not trying to get, where this breaks the neckline here at 195.40 and goes to, that's a nice trade. Yeah, it's an 80 pip move. But, I'm trying to stick in this trade where I'm going to get 1,000 pips and, I'm not trading in and out every 4 seconds. And this is one thing where, yeah, you might have gotten a successful move here. But look at all this other stuff. You telling me you're going to buy in the high, buy in the lows, sell on the highs, and this kind of stuff for 6 months and do it well? I don't think so. And that's not what I want to do. I don't want to sit in front of a screen until my eyeballs bleed. I put in my pending order at the end of the day and then walk away and just go about my life. So yeah, I look at long-term patterns. So it could be monthly, could be weekly, could be daily. I usually just start off with the daily, and I can kind of see what's going on here. You know, I have my double bottom, I have my key reversal, and I would just buy this thing right here. This is the pound New Zealand. So I can just make a snap decision. You know, I go through, you know, whatever, 25 of these charts in about 10 minutes. And I'm really looking just to shut down one chart after the other. I'm not looking for more trades. I'm looking for very select trades where I know exactly where to get in and, you know, where I can understand what my risk is. And, you know, if I'm, you know, trying to hop on board what I think is a trend or a move that's going to project or continue in a direction that I can understand. So Jose says, which currencies are your favorite? I don't play favorites. This is not like my children. I just, you know, look at patterns. In fact, you should just take this off here. You could, this could look like WRK. It could like, it doesn't matter. Pork bellies, it doesn't matter what this chart is. I would trade this thing if you told me it was an orange juice future or anything. I can understand the risk reward dimensions. I can set up my trade. And as long as you can set up your trade with a justifiable risk reward, even if you're wrong, over time, you don't need too many of these things to be a huge winner. All right, I'm going to wrap it up pretty soon. We've got four days together, so hopefully Yelena on YouTube says, what do you think about Nasdaq? Target of, I don't think in terms of targets. You know, the market's going to go where it's going to go. If it's going to top, it's going to put on a topping pattern. It's really at a resistance level. You can see once a market gets to an area. So this is where I shorted, where I bought all those puts on February 19th, right there. Actually, it was right there. I saw one key reversal, then I saw the other key reversal, and right here on Friday, I bought these puts. I think it was there. It was, anyhow, it was February 19th. And then you can see those 2 weeks. Here's this bang, bang. It just came down in, you know, 2 weekly from 334 all the way to 300 on the QQQs. So now you're back to the old highs. Whenever you know, challenge old highs, it's very conceivable you're going to get, you know, resistance. I think this may try and push, you know, through here. I don't see any selling right here. So I would wait until something happened to tell you that this is turning. Right now, it still looks like it's going strong. Tekagene says, when are you going to place your trades for the week? So today I sent out an email to our elite members, and I'm going to show you an email with a video that talks about if you want to join my elite program. I sent it out today on the, let's see if I got into my mailbox. I'll show you a picture of it, what it looks like. For some reason, my images aren't. Yeah, okay. So let me just forward this thing. So this is what my emails look like. I just sent it out before the webinar today. So every day, you know, for those on my elite member list, I send out an email, and what I do is, you know, I show them exactly what I'm looking at on the chart. So this is not like a managed account or a trade signal business. You know, it'd be very worthless if you said, you know, let me hand you my money. You put in the trades for me. You know, if I get hit by a bus, you know, what good does that do you? You know, what I'm trying to do is teach you how to make money in the market. So, you know, if you see this, you know, often enough for the next several months or the next several years, one day you'll see this on some other chart. You'll know exactly what that is, and you'll know what to do. So this is, I put the wrong, this was actually for the Euro New Zealand. This is meant for Euro New Zealand dollar. So this is a chart of the Euro New Zealand. I said here, Euro New Zealand appears to be in the process of forming a double bottom, inverted head and shoulders. And then I saw the inside day bar and layered it with the buy stop at 169. So I always, ask the market to confirm what I'm looking at. I said penetration above today's inside day bar will likely send prices higher. So I'm going to have to send out a correction. And in my email, I said the same thing I said to you. Based on long-term bull price patterns, today's favorable price action in pound versus New Zealand dollar, I would also suggest going long pound New Zealand dollar with a stop under today's low at 195.45. So that's what that looks like. Now, what I was looking at the time was, where is it? There. So this is the weekly chart. And so this is where it gets a little bit complicated. And I'm not going to go into it all at once. I'm just going to show you that you see patterns all the time. And so this actually looks very much like a double top price pattern, which should do what? It should do that if it's a top. But you can see that the market dug in here, formed a key reversal, and it's going the other way. So sometimes when we see these patterns and they don't go according to what the pattern means, it just simply means it's going to go the other way and become what I call a busted pattern. So this has actually been in a long-term uptrend. You can't see it from here, but you can see that there's just a huge support area right here. And in addition to the support area, when you see this, when the market closes on the low or goes to the low and closes on the high, made a new low, close on the high. These point in the direction the markets want to go because the direction actually is still, it's an upward market. So this is kind of a, one of those things where it's a bit of a nuanced thing. And, that's great because I'm trying to show you that the market shows you patterns all the time. And I think what I have learned to do is understand which are the real patterns and which are not. So this is what I'm looking at on the daily in the euro versus New Zealand dollar. This very subtle double bottom, and you have a head and shoulders, and you basically, have taken this out. So now you're, looking at the second resistance level. So once I see a pattern, then I look for what I call a confirming bar, what I call my insurance day bar, which is either, a key reversal or what I call an inside or narrow range bar. Literally where the range of this bar sits within the high and low of the previous bar. So it sits inside. So you can see that today's range from high to low sat within the previous range. So all that is saying to me is that this thing is coiling. It's creating an energy, and now by virtue of this pattern, I'm guessing that the energy is going to uncork in that direction. But I may be wrong. So what I do is I require the market to confirm. So I put my buy stop slightly above today's high, 169. I don't know what the price was, 57, about 15 pips higher than where we are now. And so if tomorrow or now the market opens and goes lower, guess what? My buy stop has not been triggered. The market went lower, no harm, no foul. I simply cancel this order by the end of tomorrow, and go and look for another trade. So what I look for is, patterns, trends, price action, layer it with a buy stop or sell stop, depending on what I'm trying to do, and then let the market do all the work for me. And some trades are going to be better than others. I mean, this is, looks okay. I prefer the pound New Zealand once I'm looking at this thing, but actually this has got less resistance than the pound New Zealand. So either one. So it's the same thing. You're kind of breaking this downtrend and trying to find a way to turn around. It may not be immediate, but I feel like this thing is trying to, go the other way. So, that's what I'm suggesting to our members. Short Zoom, we'll see how that looks. Kind of finished with a small key reversal today. So it may still be, a lot of these markets have come so far so fast that, right now I see that the volatility is starting to become constricted, that the great moves that we've all become accustomed to, they're I think it's becoming a little bit more difficult now, but that doesn't mean, you find the right trade, you can make it work for you. All right, guys, I think what I'm going to do is put a link to my Leap program. This is my daily email. I'm going to put a link in the chat box here. It also has a video you can watch. And, if you're interested in the program, it'll tell you exactly how to get in touch with me. And then we'll have one of our team members, get a hold of you. So, you can't just buy this off the internet. You'll firmly understand everything that's involved. You'll speak to our team, and decide if this is for you. And, they'll also, decide if this is for you. So we don't accept everybody. It's, called the Elite program for a reason. And we open this up, every couple of weeks. And so I'm just looking for, so Billy says, what about the stop loss? I don't know if you're talking about the euro yen. So, slightly underneath the low of today. So the buy stop was like 169.57. And then the stop loss was like 178.17 or something like that. And tomorrow I'll show you a position size calculator. So some people say, well, there's no way I could take a 50 pip stop or a 100 pip stop like you're saying. I'd get wiped out. And that's exactly right. If you use your current position size, you cannot, trade with a wider stop loss. But if you take a much smaller position size and look for a much bigger profit, that's how you make money in the markets. And I'll show you a position size calculator that will help you do. It sounds complicated, but it's really not. So Rob says, thanks again for your instructive lesson on patterns. You're welcome, Rob. John says, thank you, Mark. Great stuff. Appreciate. So thanks, guys. Butch, thank you. Thank you. All right, guys, I'll see you back tomorrow, 5 p.m. Eastern Standard Time. Thanks a ton.